to beginner classes as I had promised. I won't go into much details really, but I'm hoping by the end of these lessons you'll have a clue of what exactly forex trading is. So maybe to just start off, yeah, forex trading, commonly known as FX trading, is the buying and selling of currency pairs, yeah, with the aim of making profits. So there are many participants in the forex market. We have the retail traders. So retail traders are people like me and you, the small boys in the market. And then we have the big money, that is the banks, hedge funds, and other institutional traders. Retail traders are the most participants in terms of numbers, but the people who move the market are the big money, the banks, the hedge funds. Our focus in these classes will be mainly retail traders side. So the platforms retail traders use, how to approach the market as a retail trader, and so on and so forth. So in today's lesson, my emphasis is on the basics. So trading as a retailer, you need a platform called a MetaTrader 4 or MetaTrader 5, commonly known as MT4. And then we have MT5. So what you're seeing on your screen is an MT4, the mobile phone version. I'll start with the mobile phone version, and then in other classes I'll do the PC version. But the approach I'm going to use, you can do both on phone and on our PC. So you don't necessarily need to have a laptop all the time. I started off on MT4, so I always prefer MT4. So we said forex trading, you trade currency pairs. So in front of you, this is the list of pairs. A pair is a combination of two things basically. So a currency pair is a combination of two currencies. So for instance, at the very top we have quotes. So the quotes of AUD USD. AUD is an abbreviation of Australian dollar is paired against the US dollar. So US dollar is abbreviated as USD. Our focus will mainly be on the big currencies from the big economies: the US dollar, the euro for eurozone, Great British pound for Britain, that is GBP, Japanese yen, New Zealand dollar, Canadian dollar, Swiss franc. Yeah, I think those are the major. They're like 8. The Australian dollar, US dollar, euro, Swiss franc, Great Britain pound, Japanese yen, New Zealand dollar, Canadian dollar. Yeah, first pair on your screen is the AUD USD. So AUD is Australian dollar against the US dollar. We have the euro CHF, that's the euro against the Swiss franc CHF. So we have the euro GBP, that's euro against Great Britain pound. So GBP is the abbreviation of Great Britain pound. Euro is the abbreviation of EUR, is the abbreviation of euro. CHF is the abbreviation of Swiss franc. JPY, Japanese yen. NZD, New Zealand dollar. CAD, Canadian dollar. Yeah, below that is an abbreviation of gold, that is XAU USD. So gold against the dollar. Currencies are paired, so we always have the base and the quote currency. Of that pair, let's pick AUD USD. So the quote is the base and the quote currency. So the quote base currency is the first currency in that pair. In this case, AUD is the base currency, and then USD is the quote currency. So euro CHF, euro is the base currency, CHF is the quote currency. Yeah, another thing is we have something called the spread. So spread is the difference between the bid and ask price of a pair. So in this case, we have the AUD USD. For instance, you see, moving on to your right, we have that price 0.63591. It's fluctuating. So, and then we have the next price is 0.63591. So it's fluctuating, moving up and down. So the difference between these two prices is the spread. That's the cost of buying or selling that pair. In forex trading, we make money both ways, when the market is going up in prices and when it's going down. So when it's going up, the typical entry is buy. You buy with the expectation that it's going down, but if you expect the price to drop in value, you sell. It's called short selling. So you go long. Long is you expect the price to go up, and then sell, that is short selling, you expect the value of that pair to drop. So coming back to the issue of spread, so spread is the difference between the bid and the ask price. Yeah, so spread is measured in pips. We prefer pairs with a smaller spread. So the units of measurements in currencies is done in pips, but the smaller unit of pips is the pipette. P-I-P-P-E-T-E-S, pipettes. So like 10 pipettes make 1 pip. Yes. So the common unit used is pips. So for instance, the spread for AUD USD, we have a figure there, spread of 5. Those are 5 units. Yeah, those are like 0.5 pips. Like there are 5 pipettes, and 10 pipettes make 1 pip. So a spread of 5, a figure of 5 here, is an implication that those are actually in pips is 0.5 pips. You divide that by 10, but in pipettes, those are 4 pips. An example of a pair that has a double figure here. Let's say the bottom, at the bottom we have XAU USD, that's gold. So gold has a spread of, it's fluctuating, is a double digit, 16, 18, blah, blah. So let's say a spread of, if you read a figure like spread of 20, those are 20 pipettes. So you divide that by 10, it's 2 pips. So that's a spread of 2 pips. In this case, GBP USD has a spread of, it's 6, 8. So those are in pipettes. So if it's a single figure, yeah, you just divide it by 10, whether it's single, double. So if you're told it has, if you read like 100 units here, let's say a spread of 100 here, that means it's that 100 divided by 10, it's 100, is 10 pips. Yeah, and if you read the whole figure, it's 100 pipettes, whatever you're reading here. So for instance, GBP CHF, Great Britain pound against Swiss franc, has spread of 15. So you divide that by 10, it's 1.5 pips or 15 pipettes. Basics of trading, basically, like here, these quotes, you can add or remove pairs, your preferred pairs. So at the bottom, at the top right, we have that plus icon. So you find symbols, you add any pair you want. So you have the option of searching, or yeah, you search, or you come here and pick from the list given. So let's say I want to add something like US 30, this one. So when you come back here at the bottom, you realize you have US 30 roll. So when I click on the US 30 roll, it gives me these options of new order, open chart, symbol properties, and that is simple view mode. So to open the chart, I click open chart. So that's the US 30 roll chart. So going back to quotes, bottom, you click the bottom left. Yeah, so those are the quotes. So our interest here, I mainly trade GBP USD. So our interest will be the GBP USD pair. Today, yeah, going forward. So you look at the quotes here. The broker has the spread is small, meaning the cost of buying or selling GBP is not that high, is not that high. So you can manually calculate. No need to manually calculate, but if you do the difference between buy and sell, the bid and ask price of GBP USD, you'll get the spread. But you can just read it directly there. So you always have to pick pairs with smaller spreads. we're going to the charts. So let's open the GBP USD chart. So you just come here, you press and hold GBP USD. This is the mobile phone version. So you open chart. So these charts, you'll hear someone saying GBP USD M1 time frame or D1, and so time frames. The word time frame, so different time frames. So when you click just anywhere at the center of your chart, this pop-up will come up. So we have this one shows you the time frames. We have the time frames at the top here. We have this crosshair. If you want to locate something, crosshair. So let's say you want to pick at what level, and then you read the price on your right. So let's say this high, it's at 1.21199. Yeah, and then we have this, you add indicator. So indicators are stuffs like RSI. Yeah, let's click F plus. That's to add indicator. So trend indicator, we have things like average, directional, movement indicator. We have moving average, oscillators, blah blah. So volumes. So if you want to add indicators, let's say you want to add a moving average, the parameters, the periods of 8 shift. So it's an exponential moving average. Let's say I want to use a simple moving average. So if you add there, you come back to your chart, you'll see that blue line. Yeah, you can customize your indicator. So let's say moving average, I want the 8 period to be let's say something like black. So I come back here to your charts, I have a black moving average. So I add another moving average. Let's say this was an 8 period, I add the 20 period, 20 simple moving average. So 20, I want it to be let's say red. This shade of red, is this red really? Yeah, this shade. So done. So when you come back to your charts, you'll see the 20 moving average red, the 8 simple moving average is 8, there is black. So to delete, I come here, and then there's this top right, we have this delete icon. I'll select the indicators I want to delete. Yeah, so that's the basic navigation of the MetaTrader form. So we have this is GBP USD, Great Britain Pound against US dollar. So this is the chart. So GBP here is the base currency, USD is the quote currency, and this is the M1 time frame. So if you click here, M1 stands for 1 minute. So each candle here represents a minute. So after every minute, a new candle is formed, and the candles form from left to right. So every minute here, each candle represents a minute price action, the behavior of this pair, of this currency pair, each minute. When you go to the M5 here, each candle here is the 5 minutes period. So each candle takes 5 minutes to form. So what you're seeing here, a candle will form and close after every 5 minutes. We have the 15 minutes, the same. Each candle here represents price action every 15 minutes. We have the 30 minutes, M30. We have the H1 is the 1 hour time frame, H4 is the 4 hour, D1 is the daily time frame. So each candle here represents price action for a single day. So week W1 is the weekly time frame. So each candle here is a weekly price action for a week, and then MN is the monthly time frame. So MT4 is restricted to between M1 is M1, M5, M15, H1, M30, H1 1 hour, H4 4 hour, D1 daily, W1 weekly, and then MN monthly. So going back to the MN time frame. So that is all about time frames. Yeah, and then specific candles here. Yeah, you see there are red and green candles. Red and green candles. But you can always customize and choose your preferred candles. Yeah. so color, but the typical, say the conventionally most people do the red and green candles, but color doesn't matter. So this type of chart is the candlestick chart. These are the candlestick charts. They look like candles. We have bar charts, we have line charts, yeah, and we also have yeah, bar, line, and candlesticks charts. Yeah, so if you want to add objects here, let's say a horizontal line, this one. So I double tap and change that edit. I'll change the color of the horizontal line. Let's say I want black style, I want it 2 pixel, a little bit thicker. Done. So it's, you see, it's thicker. So I want to draw something on my chart. So to delete it, I'll double tap that candle. So I delete. Yeah, so candles, let's say how candles form. We have a bullish and a bearish candle. So by bullish, I mean it's going up. Anything, if you hear the word bullish, bull, going up, bearish, going down. So in this chart, bullish candles are represented by green. Bearish candle are represented by red. Let's use like a 1 hour time frame, H1, for easy reference. So as you can see here, we have red and green candles. So the difference is if you look at the anatomy of this candle, it's how they form, where they open, where they close. So we said bullish candles going up. So let's use this crosshair. You realize, let me use this line here. So this, let's make it a little bit thicker, blue. So you're looking at this blue vertical line. From this blue vertical line, let me add another vertical line here to just show you what I'm talking about. So you realize the price action is basically the behavior of the market between these blue vertical lines. You realize the market was buying, it was going up. So we can say the market was bullish between 5. The bottom of your chart shows time and date. So that's time, date and time. So between those two vertical lines, we have a bullish price action. The market was buying, it was going up. And moving further, let's pick, moving ahead, you realize after this period here, so you realize from now the candles marked between those vertical lines, we have red candles. They're dropping, so they're falling. So we consider that bearish. Bearish from the word bear. So bearish price action means the market is falling, it's losing value, like it's dropping in value. So that's a bearish market, and it's characterized by red candles in this case based on my customization. So you can choose your preferred colors of stuff, but in this case, when using this one, it's the red candles to imply bearish, and then green candle bullish. So the difference in bullish, like if you look closely at the anatomy of these candles, you realize they open and close. Differently. Let's say this candle here. Let's zoom in. So this candle here, this one, 31st October 15. So 15:00, that's 3 p.m. So this candle opened here. So a red candle, that is a bearish candle, it opens higher and closes lower. So the close of this candle, the body. So the anatomy of this candle, we have the open here at 1.21791, and it closed here at 1.21591. So that the red bit is the body of this candle. If you hear something like body, the body of this candle, so the body is the space between the open and the close of that candle. So red bearish candle opens higher and closes lower. The outer parts of the body are referred to as tail or wick. Wick of WICK. So we have so wick means basically it means this candle opened here at 1.21793 level, went higher. So the wick is just an indication that price within that period, price reached that level, but it did not manage to close at that level. So this indicates it went as high as 1.21857. So that's the high of that period, and then it came back to opening, went lower, pushed lower to this level, the 1.21559, but it did not manage to close here. So the market participants pushed it slightly higher and closed here. So that's the price action during that period. It opened here, this level, went higher, came back lower up to this low, and before the end of that 1 hour, since this is the H1 time frame, the 1 hour, meaning before the close of that 1 hour, the price was pushed back up here, and then it closed. So the next hour, the candle opened here, pushed lower, and closed here. So the next hour, market opened here, it pushed higher here, the 1.21561, and came back lower to this level, the 1.21263, but it closed here, and so on and so forth. So that's the open, close, high, low of a bearish candle. So using an example of a bullish candle, it opens lower and closes above. So bullish, it opens and closes above. It closes above the open price, but bearish, it closes below the open price. That's the differentiating factor. So in this case, this candle here, this one here, this one. So it opened here and closed above. But this candle here, this one, the 31st October 1500, it opened here, but it closed lower. Yes, so let's use this candle here, this one. Yeah, I use the horizontal line of the crosshair to distinct, rather to mark the candle I'm talking about. So this candle here, it opened here 1.21483. Since this is a bullish candle, it closes higher, so it pushed lower. So the bulls, the buyers, managed to push it back to open price, pushed higher to this level, the 1.21610, and closed here. So the next hour, price opened here, this level, the 1.21558, pushed lower, 1.2145, came up to this level to create a new high, but closed here at the 1.2172. So for this candle, so the next candle, the same. So that's the basic price action of candles based on bullish or bearish nature, if the market is bullish or bearish. So the next thing here is to show you how to enter a trade. So guys, that is it. See you in the next tutorial. So guys, see you.